Welcome everyone to this live broadcast. Just this morning, Danish IT outsourcing company Wirtek published a report for the first quarter of 2022. And joining me today on link to answer a few questions, I have Michael Aaen, CEO. Welcome.
Thank you very much, Michael. My name is Michael Aaen and I'm the CEO of Wirtek. And as Michael said, we are an IT outsourcing company. We were established back in 2001 as a spin-off from Finnish Nokia. So we have more than 20 years of experience inside the IT outsourcing industry. As of end of Q1, we were 187 colleagues in our team. And we are establishing long-term partnerships with our clients. So they've been with us on average more than 6 years, although we are continuously adding new clients into the company. We have 2 offices in Denmark, and we have 4 development and test centers in Romania. And we are one of the old First North companies in Denmark. We listed back in 2006 as the third company in First North Copenhagen. And just 3 interesting financial highlights. For the past 5 years, our revenue has grown by 29% on average each year. And in the same period of time, we grew our EBITDA by 47%. And when we start a new fiscal year, we actually have 80% of our revenue in place. So we have a very good foundation for the future growth. So since we just came out this morning with our financial report, I have a few key figures here that I'd like to share. Our revenue in first quarter was 16.3 million Danish kroner, and that's actually a growth of 111%. Compared to Q1 last year. And we also showed an EBITDA of 2.6 million Danish kroner, which is a growth of 76%. So all in all, we had an EBITDA margin in Q1 of 15.9%. And if we look at on the right side of the slide, we can see how the revenue and EBITDA has developed since Q1 last year. And revenue has grown quarter by quarter. And except for Q2 last year, where we actually had quite a bit of a cost related to the acquisition of CoreBuild, otherwise EBITDA has also been growing quite nicely quarter by quarter. Looking out for what's going to happen in 2022, we actually came out with increased expectations in March because we announced a big new Danish client that will have impact on both revenue and EBITDA this year. So now we expect revenue of 64 to 69 million Danish kroner, which is a growth of 41 to 52%. And on EBITDA, we expect between 8.6 and 9.6 million Danish kroner, which is a growth of 39 to 54%. Now, another exciting thing that actually happened was that we came out with a pretty big increase in our expectations for our Accelerate 25 strategy that we launched in January last year. So now we have a new, we call it Accelerate 25 XL strategy. And we actually increased our revenue goals for 2025 from 100 million Danish kroner to 130 million Danish kroner, which is a growth of 30% compared to the original goal. And for our pre-tax profit goal, we now expect 15 million Danish kroner, up by 50% from the previous 10 million Danish kroner. We also had an EBITDA margin goal of at least 6% EBITDA every year in the strategy period. We actually changed that goal to now being an EBITDA goal for 2025 of 18 million Danish kroner. Another pretty exciting thing we announced was that we actually have a new operational goal of moving on to a Nasdaq Copenhagen main market during this strategic period. As for our 4 strategic tracks that we launched last year, we're actually keeping those. So we still go after accelerated profitable growth through both double-digit organic growth as well as growth through acquisitions. And we are also going to expand more internationally. And we also want to make sure that we have the capacity to actually deliver the services to the clients through a scalable and sustainable sourcing capability in the company. And last but not least, we also want to be considered best-in-class workplace so that we can retain and attract the best talent in the market. So these were the words for me for now, Michael. So back to you.
Very interesting. Thank you very much. We'll head straight into the report. The momentum continues, 16.3 million Danish crowns in revenue. This is an increase of 111% compared to last year's first quarter, as explained in your presentation. EBITDA margin, while still in line with your goals, decreased, but profits increased. What drove these developments?
Well, first of all, if we look at the revenue side, 111%, that is, of course, pretty nice. We did an acquisition last year, and that started to have effect from June. So, of course, we got the full impact of the Corbild acquisition we did last year in Q1 this year. So that added about 40% on our revenue. At least Corbild business accounted for 40% of our total revenue in Q1. But very interesting as well is we actually grew organically by 41%. During Q1. And that was growth both generated from existing clients ramping up more people with us, as well as us gaining new clients during the quarter. Concerning the EBITDA, we've made some significant choices in order to prepare the organization for the future growth, because of course we want to grow further in the future. So we actually recruited a very senior CFO that started with us at the beginning of January, and we also appointed an HR and administration director in order to make sure that we have the competencies in-house to take us to that next step in organization-wise.
Indeed, and apart from the key personnel, the report also mentioned new implementations. I thought you could tell us more about that.
Yes, we are this year implementing both IFRS, and we are also actually implementing a new ERP system. Because, of course, we want to, as we grow there, our business becomes more and more complex, and we want to make sure that we have timely data so we can follow our business closely. And these are, of course, significant investments for us.
During the quarter, you signed a large contract with a new client in Denmark. The contract will involve establishment of a large team. Will this be made of new employees or existing ones?
Well, a combination. We actually, were able to allocate a couple of existing Wirtek people in that team, and then of course we're going to get many more new people into that team that we're going to go out and recruit in the market.
I know that you have a retention goal of 80% by 2025. Will these new employees, or do you hope these new employees stay at Wirtek?
Well, of course, the goal is actually 85% retention rate from 2024. And that's, of course, one of the things we also recruited an HR director in the company, is to have really much focus on both the retention side of the business, as well as our ability, of course, to recruit the needed talent in order to grow the business. And retention is key, because we are in an industry where there is a lot of attraction right now.
And if we talk about proportions then in relation to this new contract, how will your workforce be allocated to this new project?
Well, it is, of course, going to grow quite a bit, this team. And most of that team is going to be from new colleagues that we are going to recruit into that project. We have not said anything in the market about the actual size of that contract, but it was big enough and had impact enough this year to actually for us to come out with increases in expectations for the year. So it is significant.
The devastating war in Ukraine was highlighted in the report, though you noted in your CEO letter that demand for your services has increased as a result. How so?
Well, in a situation like this, of course, there is a lot of uncertainty in companies that rely on services delivered from an area of war zone. So, of course, we do have clients and also requests from potential new clients that actually want to try to decrease their risk in the delivery system inside of their own company. And it's not only that Ukraine has challenges right now, but we're also of course seeing that companies like Belarus and Russia have a lot of IT as well, and of course these are going to be on sanctioned lists as well.
We'll move over to the new goals. The new client increased your expectations, and you have increased your revenue goal by 30% and the earnings before taxes goal by 50%. The difference here in these increases, 30% increase in the revenue goal and 50% increase in the earning before taxes goal, how should we interpret it? Are you more confident in cutting costs up to 2025?
Well, I actually don't expect to be cutting costs. You know, we are kind of getting this because of economics of scale here, because we've been actually showing since 2019, when we ended 2019, about 82% of our people, colleagues were billable, and end of Q1 this year, we had 87% of our people were billable. So we are able to scale the company in such a way that we add more billable people than overhead in the company, so that we actually get more and more profitable as we grow the company. So it's going to come by us becoming a bigger company with more services being billable without having to grow the overhead part of the company at the same rate.
Interesting. I'm also curious about the Nasdaq listing goal, aiming for a main listing by 2025. Which preparations need to be made?
Well, we actually started them this year because we actually announced that we are going to implement the IFRS accounting standard, which is needed for us to be listed on the main market there. So we are doing the preparations in that respect so that we can, in principle, from next year forward, move on to the main market.
I see. Well, thank you very much, Michael, for your time, and I wish both you and Wirtek continued luck in the future.
Thank you very much. It was nice to